Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of February 26th through March 1st, where we'll talk about ways to make money trading while AI FOMO is raging, where FOMO is fear of missing out. So we've got the fear of missing out of AI is currently raging. And again, we'll look at why that's the case and also talk about ways to make money trading while AI FOMO is raging. So let's get started. Thank you again for joining us in the live chat, Douglas PC. Glad to see you. Hope you've been well. So here's our Google document with our notes for our weekly trading game plan, part one for February 26th through March 1st. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes contain links to bonus videos, the tools and resources we use to do our market analysis, conduct our trading strategies, our trade ideas, etc. We store all of our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks, and you can find links also to that publicly accessible Google Drive folder in the description box below. So first we'll take a look at how the markets ended up on Friday in the main page in FinViz. So we can see Dow eked out a very small gain. NASDAQ actually had a slight correction during the day, but we'll see, the AI FOMO was running after the NVIDIA earnings on Wednesday, and we'll talk about that some. But a slight correction profit taking on Friday. S&P pretty flat, although I believe this is a new record high, again, closing for the S&P. We see advancers and decliners, 57% advancing, 37% declining. We got 86% new highs, only 13% new lows, 59 or 60% above their 50-day moving average, 40% below, 65% above the 200-day, only 34% below. And even though we had a little bit of a market on close, a red candle, overall it was bullish. Again, we see on Friday, we had some profit taking, some rotation out of the Magnificent Seven, although NVIDIA still ended up slightly positive. It was lower than its high for the day. So again, some profit taking, some correction out of the Magnificent Seven later in the day on Friday. We also saw weakness. We'll see this in the groups and sectors, weakness in energy in the defensive sector. So it's definitely AI FOMO and risk on after the NVIDIA earnings on Wednesday. Welcome the Crow, the Ricky Khan, Ellen Krantz. Thank you all for joining us in the chat today. Hope you're all doing well. So some of the news, the annual meeting, I believe, of Berkshire Hathaway is going on. I'm sure they'll talk about passing of Charlie Munger. He will be missed. Talked about the moon landing, lunar. So, sell the news on that. NVIDIA is now the Magnificent One. So again, the AI FOMO triggered by NVIDIA. Traders too scared to fight the rally, the AI rally. So again, the AI FOMO. Dow closes at fresh record and S&P hits all-time high. So again, all-time high on the S&P. See, oil's been a little volatile, but still range-bound between 75 and 80. It did decline on Friday, so we're sitting around 76. Natural gas had a rollover in futures, and we'll talk about that a little bit. Did pop up briefly, and then it looks like it's retracing back down. We'll see if it tests that recent low. Gold's been, again, pretty range-bound around 2050. See, right now, the Dow futures are pointing up, S&P and NASDAQ pointing down. DXY, the dollar's been pretty oscillating right around 104, broke down a little bit below 104, but again, it's been pretty oscillating around 104. Treasuries had been upwards of almost 4.5. And then we could see on Friday they retraced a little bit, and we'll see that again in the futures. But again, Treasury yields have been much higher now, so Treasury prices down. Welcome, Logan Flips, Doug M, Easy Mike. Thank you all for joining us. Hope you all are doing well. So we'll look at the major indices and the technology components. And again, a reminder, you can find these screeners. So you can use the links in the notes, or you can always find these screeners now in the screeners sheets in our ETFs and Watchlist Google Sheets. So if we look at the major indices, again, we see Dow made a new high. S&P made a new high, so you can see they both broken out, making a new high. Now this upper trend line on the S&P likely to provide some level of support. See, the Qs essentially are testing that upper trend line. It did break out previously, got a little bit of a breakout, and then a correction off of that, but we can see we've got a very narrow rising channel in the Qs, so a lot of strength. We'll see some, choppy volatility but between those trend lines, but again a very strong uptrend, again driven by the AI FOMO. See, IWM is actually suffering, I think, a little bit from the AI FOMO. I think people, are moving out of small caps and pouring into the Magnificent Seven, NVIDIA, the AI stock. So I think that's causing some suffering in the IWM, the small caps. Again, we see it's been very volatile, very choppy, sitting at oscillating around a support line right now. And again, I think if we see a rotation back into the Magnificent Seven, which I would expect, back into NVIDIA after the slight correction, I don't know if that'll end on Friday or continue slightly into next week. But when they pour back in, I think that will cause IWM to suffer again. So if we look at the technology components, again, we see FANGs very strong. Again, Magnificent Seven, the AI perceived stocks, NVIDIA, etc. So it's broken out, trending, got good support now. I would expect that to continue. Same way with semiconductors, SOXL, again, driven by NVIDIA, AMD, SMCI, which I guess SMCI, I'm not sure if it's even in SOXL. It is in the Russell right now. Overall Qs, not quite so much, got rejected off that upper trend line. And again, the broader technology market, more of a correction, never did quite reach that previous high. So this is really an AI FOMO run, a Magnificent Seven run, and not so much the overall broader technology. See, biotech did get a pop up, broke out slightly. It's got a narrowing channel again, but not really going anywhere, pretty flat. And we see ARK-K really didn't participate in that. So it's not really participating in the AI FOMO. These are, longer-term innovation stocks. So you see ARK isn't really participating in the AI FOMO or the Magnificent Seven run, etc. So ARK-K definitely the weakest of the technology components. Welcome, MD. Thank you for joining us. Hope you're doing well. Sydney Osborne, glad to see you again. If you're not familiar with that term, Sydney, FOMO, fear of missing out, right? So hopefully you're familiar with that. And right now it's raging, right? Everybody wants to be in AI. We'll talk a little bit more about not only in stocks, but also companies, how that AI FOMO is impacting them as well. So let me grab a quick drink and we'll look at the groups, sectors, industries in FinBiz for the week. Okay, if we look at the group sectors for Friday, again, a little bit of a risk off, profit taking on Friday. So we saw a rotation back into industrials. Industrials have been very strong. Got a rotation into utilities, into basic materials, out of technology, out of communication services, and consumer cyclical. Energy, again, continues to be weak. And we'll be looking for opportunities, a rotation back once this AI FOMO exhausts itself. I think energy may be a sector where there's some opportunities. Same thing with real estate. Real estate's been weak. Again, we saw treasury bond yields go up, mortgage rates went up, so that causes real estate to suffer some. You see, for the week, however, the defensive sectors were actually pretty strong, even though we had this, FOMO AI rally. For the whole week, technology really wasn't that strong. Same way for the month. Technology's kind of in the middle, real estate at the bottom. Got some more defensive sectors. Again, financial sectors rebounded from its bottom. Look at some of the industries. So actually, silver and gold had a rebound on Friday. We're generally pretty weak for the week. And we don't see, there isn't a whole lot of technology, AI, in the top of the list for Friday. Look at the weakest industries. So solar, been very beaten up. Again, part because of the increasing interest rates. Again, energy's been weak, so energy pushing all of these sectors down. Oil again declined again. I want to pop open uranium again. We've looked at this for a couple weeks now. I think this is a coming opportunity. We've seen how all the uranium stocks have rolled over, so I'm keeping an eye on that. When that cycles back down, I think there'll be a nice opportunity in uranium. We like UROI, UUUU, DNN, LEU, and they're all kind of cycling down. So we'll keep an eye on that industry and wait for those to cycle down, and then we'll swing those again as we did previously on the previous cycle. For the week, semiconductors, NVIDIA, AI driven. I've got Walmart, so Walmart did pretty well. So the retail stores, a little bit of a recovery in agricultural inputs. Be looking at that into the spring. Silver had a little bit of a rebound. Utilities rebounded. Some of the REITs. Weakest for the week, again, solar, uranium, some broadcasting, some other energy, etc. For the month, probably technology, semiconductors. And again, uranium, coal, gold and silver have been weak for the month, so it looks like maybe they're making a little bit of a rebound. Yeah, I'll talk about some. I see you're talking about some of the data center REITs, DLR, EQIX. We'll kind of talk about that when we get to our strategy section as a theme. So we'll look at the economic data from this week, although again, everything was pretty much waiting for the NVIDIA earnings and then reacted to the NVIDIA earnings. And my humble opinion, the economic data took the back seat. The market wasn't terribly concerned with that data. It was much more interested in the NVIDIA earnings. So I'll go through my notes. Let me grab a quick drink, and then we'll go through my notes and we'll look at the economic data. Hope you all had a good President's Day on the 19th. So on Thursday, we got jobless claims data. Again, continuing was a little bit less than expected, and initial was less than expected. So the job market continues to be resilient, which should have caused some concern and pushed out the probability of Fed rate cuts. They're even talking about the possibility of a Fed rate hike. In my humble opinion, I don't see any further Fed rate hikes, and I think they pretty much told us they're at peak rates. The only question is when and at what rate are they going to cut? Just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. Let me grab a quick drink and we'll go through the rest of the economic calendar from last week and look at upcoming economic data for next week. Welcome, John. Thank you for joining us. Glad to see you here. Yes, please remind me tomorrow we can talk about land. We can look at in our dividend payers Google sheet. And again, talk about that. We're still in land as well. So we got some bond auctions. Don't look too bad. Got mortgage rates went up. Again, treasury yields have gone up. So mortgages go up. So, new home starts tend to go down. Still got Fed officials talking about, when are they going to cut? It's going to be later, fewer than the market had predicted. I think now the market's down to 4 cuts, and the Fed's already told you, they're not going to do more than 3, probably second half of the year. So again, jobless claims data, we talked about that. Manufacturing actually picked up a little bit. It's above 50, so that's a positive. Home sales, existing home sales picked up a little bit. Natural gas storage was down a little bit more than expected, but not significant. And again, we'll see natural gas prices popped up and then are retracing, descending again. Bond auctions, again, not too bad. Fed balance sheet continues to run off, so quantitative tightening. Oil rig counts bounced up a little bit. Total rig counts bounced up a little bit. Although I did hear somebody was closing down their Permian operations, and that may have an impact on not only oil but natural gas. Okay, next week. So we've got building permits expected to be negative. So again, higher mortgage rates, new home sales expected to go up. Durable goods, home pricing. Again, still got Fed speakers, and we get PCE, so core PCE and GDP data on Wednesday. So PCE is the primary data point that the Fed uses for their interest rate decisions. So if that comes in significantly hotter than expected, normally that would have a negative impact on the market. Again, GDP is expected to be lower than previous, but still positive. So no indication of a recession, even though we're hearing that Japan, the UK, and Germany, I believe now are all in a technical recession. And that can impact, global trade, etc. So I hear people talking about that. Again, we've got Fed officials continue to talk. So Thursday, we also get some PCE data, jobless data. So Wednesday, Thursday could be some volatility. Although, again, I think the AI FOMO will continue to overwhelm the interest in the economic data. Friday, we got some ISM, some construction, and we get Michigan sentiment. So that's becoming a little bit more important. We'll see if the consumers' perceived inflation, continues to decline, if current conditions continue to improve. So again, Friday, that might cause some volatility as well. Could also look at the earnings calendar here in investing.com. So we've still got earnings, although all the Magnificent Seven are now past us, all the mega cap techs. So you can look through this and see who's continuing to report. We've got some software, Berkshire. I'm sure Berkshire will do fine. Zoom, again, some tech, some retail, pizza, Domino's, etc. But again, the major earnings I think are behind us. I think these will be sector specific, so you can see who's reporting, see what impact that may have on your portfolio, etc. So again, I think it's going to continue to be AI hype, AI FOMO driven, and these will be specifically important to specific companies and industries. So if anybody knows of any other important earnings coming up, please let your fellow BeachBum traders know. You can post it in our Discord, etc. Got some biotechs, etc. And again, you can hear our previous discussions about how to trade around earnings. Although again, I think it's earnings season's starting to wind down. We've got all the Magnificent Seven, all the major mega caps behind us. So again, I think the overall trend will continue. The AI FOMO will continue until we get some catalyst to change that trajectory. Again, reminder, the next FOMC meeting is March 19th and 20th. Also, we get an SEP, their strategic economic projections, and that will be important because that will give us the next look at when are they projecting that they're going to cut rates. And again, I expect that to be later than what the market is currently expecting, so that may cause some negative reaction out of the markets. Okay, so let me grab a drink and we'll jump over and look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, you can still get 75 free fractional shares of stock by opening and funding your account with $25K or more. If you fund your account with less than $25K, you can get 25 free fractional shares of stock, each worth between $3,000 and $3,000. And if you'd please use our affiliate link in the description box below, you can get your free fractional shares of stock and also help support our BeachBum trading community, which we greatly appreciate. Again, this is the market screen of the online browser version of Webull. So we can see the histogram of advancers and decliners from Friday. So we see it's pretty balanced. The percentage of advancers is very small. So again, mostly balanced, pretty flat, pretty profit taking out of the Magnificent Seven, rotation into some defensives going into the weekend. Again, we see inflow in the NYSE, outflow. There was an initial inflow into the NASDAQ, and then as the day progressed, as we've seen for quite some time, profit taking outflow out of the NASDAQ. So that seems to be the trend for on Fridays. Again, you can also see a near-term earnings calendar here on the market screen in Webull. So again, we see Berkshire, etc. So you can keep an eye on who's reporting earnings soon in the market screen in Webull. I'll look at the industries and ETFs. And they've got this new heat map you can use. So if we look at the best performing industries for the week, again, energy, consumer goods. So again, you see the tech stocks are not in the top row here. Semiconductors, again, it's going to be, mostly NVIDIA driven. Biotech, somewhat positive. So again, those that are announced positive trial results. Some bounce back in chemicals. Retail, again, probably, Walmart. Utilities had a rebound. Again, utilities. And mostly green for the week. Okay, ETFs. So right now it looks like down on the Nasdaq, up on the Dow. Dogs of the Dow down. Mid caps, S&P. Again, down on the Nasdaq. So that's from Friday. So profit taking out of the Nasdaq. BITO or BITI is the short on Bitcoin. Got short on VIX. Again, we'll see the VIX popped up and then didn't really hold those gains, down below 14 again. Up on the Russell, up on small caps. Industries, some builders, industrials, healthcare, financials. Again, rebound in financials, rebound in utilities, negative on communication services, energy, real estate. Again, defensive. So again, Friday, kind of a risk off, profit taking from the AI FOMO earlier in the week. Welcome to Thinker. Glad to see you. Thank you for joining us. So physical, that's probably a physical silver, it looks like. I'm not sure what another physical silver. So again, we might get a rebound in silver. $25-year plus. So the longer term bonds looks like there's some interest in. It kind of makes sense. They popped up to almost 4.5 yield. Okay, now let's look at the futures. We'll look at the futures in FinBiz. Also, I have a question for the community, which I posted in the futures channel of our Discord. Just a reminder, our Discord's free to join. You can find a free invite in the description box below. We would love to have you and encourage you all to participate. Join our Discord. You can participate in discussions on a variety of asset classes, trading styles, etc. in our free Discord. And again, in the futures channel, I posted this question, and I'd love to hear your responses on where we can find the best places and ways to see both the current and future futures contract. One of the things we were talking about this week is the role of several of these future contracts, and it would be nice to be able to see and compare the prices for the various futures contracts, ideally, in a nice chart. So if anyone knows of a place where we can see and chart the current and future futures contracts together, that would be helpful. And again, please respond to this topic in our Discord, so for everyone's mutual benefit. Okay, let me grab a quick drink and we'll go through the futures. Okay, so here's the futures charts from FinBiz. We can see all the major indices, pretty much making new highs. NASDAQ, is just testing its previous high. So again, even with the AI FOMO, it's not quite as broad technology based. Although again, S&P made a new high, Dow made a new high. Again, Russell not participating as much. And again, we can see, those strong pumps in the NASDAQ. In some cases, we saw a decline in the Russell while the while the rest of the indices were trending up. This is interesting. And part of my AI FOMO is raging as we saw, run-ups. Nikkei's been strong, Japan's been strong, but we see this strong pop up in the Euro stocks and also in the DAX. And yet, as we've heard, Germany is in a recession. The whole Eurozone could be in a recession. UK's in a recession. And yet we see their stock markets, making new relative highs. And the comment I wanted to make is, what does the price of NVIDIA GPUs in China have anything to do with the Euro stocks or the German DAX? So they seem to have caught the AI FOMO, and yet I don't see how that has, how the AI FOMO has anything to do with the Euro stocks or the DAX. So that's another indication of why, this is definitely a FOMO rally, and, be careful, protect your profits. At some point, this bubble will burst, and we'll talk about that again. We talked about it last year. We'll talk about it again. So again, be careful, protect your profits. But this is definitely a momentum traders, market. And we saw volatility just plummeted, after the positive NVIDIA earnings had popped up a little bit, and, in case they missed in any way or anything negative. Again, oil's just been chopping around between 75 and, not even quite 80. So just volatile, just chopping laterally. Again, we saw it pop up in natural gas. Again, this was a roll of the futures contracts. And that's why I have that question about, can we see the contango or backwardation in the futures contract in some nice, easy to use tool that we can share with the community. But again, after it popped up, it's down to below 1.7 again, and looks like it's declining. We'll see if it tests that 151 area, and if so, again, we'll talk about this tomorrow in more detail. But we may add a scalping swing position in Boyle at that bottom. I missed the previous bottom and didn't quite get to that 151 low. Again, gold's been pretty flat. It's got resistance at 2050. It's testing that. Again, just oscillating, trading laterally. Same thing with silver around 23. So we see a breakout and swing back below 23. Retesting 23 again. So again, oscillating around that area. Copper had a nice run. Looks like it's rolled over. Palladium, platinum, looks like they, ran up a little bit and rolled over. All your grains seem to be declining. Again, we had that. So it was probably a roll of futures contracts, and then, very quick retracement back down. Cocoa popped back up, so that might hurt, if you're still in that Hershey stock. Cocoa prices surged back up. Welcome, Carmen. Thank you for joining us. Glad to see you here. Hope you're doing well. And again, we saw on Friday a little bit swing back up, and particularly the longer term bonds. It's kind of interesting. Looks like the 30-year found support, swinging back up. Possibly the 10s might have found some support, swung back up. So again, more of a move in the longer term bonds than in the shorters. I'm not sure if the 5s or the 2s have quite found their support, and you can see there's this gap to fill. It looks like the 2s are in the process of filling that gap. So we could, we could see more yield, lower prices in the 5s and 2s, and maybe some recovery in price in the 30s and 10s, and also in the TLT. So again, dollar's been, oscillating around 104. Did pop up previously to 105, got rejected. Now it's support at 104. Yeah, the crow. I can't find. There used to be one. I think it was called OJ. Um, Sorry, I missed your comment on orange juice. And in the past, we were looking for one to short orange juice, and there really isn't one. I'm not even sure if DBA includes that. So there's some broader agricultural ETFs that we can look at. But yeah, there's several of those agricultural products that we've never found good ETFs to trade. Corn is corn, and wheat is WAT. Let me see if there's any other agricultural ETFs that we can trade. Yeah, I know DBA has feeder cattle and hogs, lean hogs. I don't know if it has other agricultural products. Okay, next we'll look at our ETF Google Sheet. So if anybody has particular ETFs you'd like to look at, throw those up in the chat. I did have a request by Easy Mike to look at this CTA, Simple Managed Future Strategy. So as you'll see, we've done the research on CTA as an ETF in the research sheet in our Google Sheet, and we'll take a look at that. I also did the dividend analysis. You'll see it's a dividend payer. So I put the dividend analysis for CTA in the add sheet of our dividend payers Google Sheet, and we'll go over that dividend information tomorrow in our dividend payers Google Sheet. But for now, I'll go ahead and we'll look at CTA in the research sheet of our ETF Google Sheet. Just a quick reminder, if you'd like 24/7 access to our ETF Google Sheet. Again, we were just talking about, once you identify a possible opportunity to long or short a theme, be it a particular commodity index, a category, etc. If you want to find ETFs for that, playing that theme, long or short, then you can get access to our ETF Google Sheet by joining our Patreon at the All Access or VIP level. So we'll open that up. We'll look at CTA in a sec, and then other ETFs you might want to look at. So let me grab a quick drink and we'll look at that. Okay, so on the research sheet of our Google Sheet, if we go to the bottom, we'll see CTA. So CTA, as we'll see, is a futures-based, managed futures-based ETF. I'll go ahead and we'll open both the profile in the ETF database and also their FinBiz chart, so we can look at the profile for CTA and FinBiz. So you can see it is a dividend payer, pays a quarterly dividend. We'll talk about that in more detail tomorrow. You can see they've outlined that it's showing, Head and Shoulders had a big dip on their dividend payment. They paid a $1.64 dividend. So, adjusted for that dividend, then ran back up to that upper trend line. Let's look at the profile for CTA. So, fund invest in portfolio of equity, U.S. Treasury, commodity, foreign exchange futures. So it's based on futures contracts. Does not invest directly in commodity futures contracts. And it's based in the Cayman Islands. So if we look at the composition of CTA in the ETF database, so we can see it's a hedge fund strategy. Managed futures, proprietary weighting scheme, see what their holdings are. So Treasury bill, short-term Treasury, US dollar. So they've got April 24 Treasuries. They have what looks like very short-term Treasuries. So again, you can do further analysis on CTA's holdings, etc., via their profile in the ETF database. If we look again at their price appreciation potential, again, this looks like a head and shoulders, kind of ugly from that standpoint. Longer term, you see it ran right up into those moving averages. So after the ex-dividend date, you see it tends to drop and equivalent to that dividend. Then it runs back up. So that may be the opportunity to buy CTA. Is if you want to get it cheap, buy on the ex-dividend date, get the price appreciation, and then you can either hold to collect the dividend, or if the price appreciation is in excess of what you'd get in the dividend, you might want to sell, or if it does one of these rollovers, you might want to sell that as well. So if I look at the risk reward profile I identified in the research tab, you see a 52 week, it's only got a 1.2 or so price appreciation. Lifetime 1.3, so not a ton of price appreciation opportunity, but as we saw, if you buy on the ex-dividend date, ride it up, swing it up, you could get 1.2, 1.3, or 20%, 30% price appreciation. And again, tomorrow we will look at the dividend payment information as well. So Easy Mike, if you have any further commentary you'd like to add about CTA, ideally please post that in the Discord, so I can review that as well as everyone else. And again, we'll look at the dividend payment profile for CTA also tomorrow. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. So if anyone else has any other categories, etc., you'd like to look at in our ETF Google Sheet, I'll spin through some. Again, our theme is AI-based. We have a number of AI-related ETFs. We also did a previous video we'll reference in our strategy section that talks about these AI-related ETFs. I believe there's probably some additional ones also in our research tab. So yeah, we've got a few others also in the research tab. So if you're interested in playing the AI FOMO with ETFs, you can find those in our ETF Google Sheet. Again, we can see from Friday, the only one that was up is this UBot. Both bots and robo were down on Friday. Talked about all the technology components, so we'll talk about probably these in more detail tomorrow, but talked about ARK isn't really participating. So you can long ARK with ARK obviously, or short it with SARK. Talked about biotech, so you can long biotech with Lab U, Lab D. We can see Lab D is close to its 52-week low. So again, but it does have, more downside longer term. Lab U isn't really at its, all-time high. But again, shorter term, I guess Germany approved recreational cannabis. So a little bit of a pop in MJ and MSOX. We've talked in the past about this Chilean ETF. China is continuing to prop up its markets, restricting short selling, etc. So I expect them to continue to do so. You can long China with yen or several of these others, CWeb, KWeb, etc. You can short China with yang. Talked about we'll be watching energy for a possible opportunity going forward. I've been watching these Europe and the DAX ETFs to see, when they peak out. You can see it's pretty close, but not quite at its 52-week high. and then we have one to short Europe. But again, it's at its 52-week low, so I'd watch the top. But again, here's DBA. So again, agricultural funds kind of in the middle of its range, more closer to the top side. Gold, again, short-term trading, GDXU. The miners really haven't participated, so several of these mining and junior mining ETFs just haven't really performed yet, so might be an opportunity when they finally catch on. Same thing with silver. Japan, again, Japan's been running up close to its 52-week high. We have a short, if Easy Mike or somebody tells us that Japan's finally peaked, we can short Japan, although again, the risk reward's not that super, 1.6, 60%, so not terribly exciting. Been watching these lithium guys for a potential opportunity, but again, not risk reward's not terribly exciting. Again, short Qs, SQQQ, long with TQQQ. Talked about longing natural gas with boil, short with cold. Long oil with gush, short with drip. And here's palladium and platinum. Also have been watching this potash one, and I guess Mosaic actually is cutting back their potash production due to the low prices. So again, SOXL and SOXS to long and short semiconductors, long and short silver, AGQ, ZSL. Solar, again, very out of favor. So Ray's making new lows recently. TAN down quite a bit. And then the broader technology sector, long with TECL, short with TECS. We're still long TECS, so we're still shorting the broad technology market. Got single stock ETFs, both for Tesla, NVIDIA, etc., and others of the Magnificent Seven in the research sheet. We've done some recent videos on those. Treasuries, again, TLT up, so TBT down, and then you can play other parts of the curve via some of these others. Again, we're watching uranium for a cycle back down. Utilities, again, even though utilities were down and bounced back up, they weren't really close to their 52-week low. And volatility down pretty much. Wheat, not really at its 52-week low yet, but we'll see if we get a cycle back down in wheat as well. Again, we talked about corn for corn. So again, you can find the risk reward profile for corn, again, about 1.4, or, shorter term, you can get a better risk reward if you want to swing that shorter term. So I hope that all helps. Again, if anybody else has another topic or commodity, etc., you want to look at, we can, I'll leave this up for a few minutes while we talk about our strategies. Again, we have a whole series of videos on how to find various ETFs or various topics in our ETFs playlist. So you can see, various discussions of ETFs on various topics there. So let me grab a quick drink and let's talk about our strategies for making money trading while AI FOMO is raging. So again, our theme for this week is that AI FOMO is raging, and this was really triggered after the NVIDIA earnings. We saw NVIDIA sold off into the earnings, probably some concern that they might miss or disappoint the market in some way during their earnings, so it sold off into earnings, and then they beat on earnings, raised their expectations. Pretty much their guidance was all positive. In my humble opinion, that's what I was expecting. Them to beat, raise guidance, and again, they didn't disappoint the market, and that triggered the AI FOMO, to an extreme. So Nvidia went up, 20%, SMCI, AMD, etc. So all those tied up anything related to AI, they poured into following those positive Nvidia earnings. So we've talked about for over almost a year if AI is at peak hype, if is the bubble about to burst, how do we know? How do we trade that? Both on on the upside of the hype cycle as well as the downside. So you can refer to those previous discussions via the links to those videos, which you can also again find on our BeachBum Trading YouTube channel. I also put the link to the notes from last year's discussion, which I can click on quickly. So again, you can access these notes. So we talked about the warning signs. We talked about similarities to the dot-com bubble. We talked about the hype cycle, technology adoption cycle, etc., all last June. So again, you can refer back to these notes and hear those discussions in those videos referenced there. Again, we also have videos on how to find the best AI-related ETFs that we just showed in our Google Sheet, and also a series on how to find artificial intelligence stocks. So if you want to participate in the AI FOMO, again, it's a great momentum traders rally. So you can ride this up until it peaks and rolls over, and then you can ride it back down, make money both ways. So again, you can hear how to find AI stocks in that series of videos. So some things I want to add to this overall discussion on AI FOMO. While AI FOMO is raging, is watch out for offering drops on any pops and any of these small money losing AI related stocks. So particularly these small caps that are money losing, if they get a pop from this AI FOMO, that's their opportunity to raise cash, and they'll drop an offering, and obviously then the stock price will plummet. And if you get caught at that point in time, obviously you potentially lose money if you bought at a higher price. So just be aware, protect your profits, be careful for particularly these money losing companies that want to be AI related. They may not even really be AI related. So that's my second point, is watch out for every company's wanting to be seen as AI. I mean, this has been going on for almost a year. Everyone wants to tell you, how they're an AI company. Just the same way back in the dot-com era, everyone put .com on the end of their name, or they wanted to talk about how they were an internet company, a tech company. So again, watch for every company wants to be an AI company, and the algos are probably going to be keying in on these AI terms. So if a PR comes out and has AI in it and that's ticker symbol, expect the algos to jump on that because again, the FOMO is raging. So again, you can make money on this, but the algos are probably going to be quicker. They'll parse these PRs automatically, and they'll jump on those stocks. So maybe, if you're able to short, that might be opportunities. But again, that's dangerous in a FOMO environment. So here's more of a technology discussion. In the last couple minutes, we'll talk about AI. I won't babble about my past history too much. I do have a question at the end I'll ask more about if you guys are interested in hearing more about my opinions, my thoughts in these areas. But these are just some of my opinions, observations from experience in AI. Is particularly data is the new oil. And those companies that have particularly unique sources of data, there's value in that. And we even heard the UAE is wanting to get into AI, because again, I think the data is going to be the new oil going forward in the tech age. Something a lot of people don't understand about, I mean, this started as concept of data science, big data that goes back quite a long time. A lot of people don't understand the effort that's required to gather the data that you want for these machine learning models, for these large language models, and the efforts that are required to make that data usable is actually about 80% of the work in just getting a machine learning model. Um, so again, focus on companies that have unique, valuable data. We heard Reddit's talking about an IPO, and they think part of their value is the data that they have that they can license out to others. So again, a good indication of this data is the new oil. Also, to use these large language models, really you need an API. I use the ChatGPT API to do a lot of the automation for our videos, video titles, etc. Video descriptions, video keywords. So you need APIs to automate these processes. Also integrating these machine learning models, these large language models, like into an enterprise will be a challenge for companies. They have legacy systems in all their different areas. So they've got an HR system, they've got a CRM system, etc. None of them talk to each other. So there's a ton of work to gather the data, integrate the data, be able to use the data. So don't expect them to be able to capitalize, particularly, when it comes to bottom line. They might say they're working on AI, but again, it's they're going to show some bottom line improvement in their company. So again, a lot of work to be done, and therefore that's one of the reasons I'm pointing out consulting system integration. So again, this is deja vu of the advent of the internet, the dot-com wave is very similar to that. So right now we're seeing the boost in infrastructure. So we've got chips. Also, you're seeing data storage. We talked about the data centers. Also, data storage chips. So your data storage companies, Western Digital, Seagate, etc. Also memory chips. All of these processing these models takes not only GPUs, but also a ton of data storage, a ton of memory, etc. It doesn't do you a lot of good if you have the processing power, but you can't store in data. We talked about data centers, also networking. You also saw Cisco's buying Splunk. Splunk is a data company. They aggregate data from other systems, and I thought that was interesting. Cisco's trying to do some kind of integration by buying Splunk. Also your tools. So all of these things, require tools that people can use. Some of these tools are things like Snowflake, Databricks, etc. I've used a number of these tools. Microsoft has a whole suite of tools. I've used quite a few of those. And that's where, near term, you're going to see people actually making money selling the picks and shovels, selling the tools, selling the consulting. Again, these enterprises do not know how to benefit from how to use AI. These executives don't even really understand it, don't necessarily know what it is, but their board's going to tell them, we got to have an AI strategy, just like they needed to have a digital transformation strategy maybe 5-10 years ago. And I was part of that whole cycle. So then the real question is where's the money going to come from? So we're going to have money flowing into these areas. Where is it going to flow out of? And we pointed out, one of the places, in my opinion, is small caps, but again, more defensive sectors, other technology sectors. Where are they going to take money out of so they can participate in this AI FOMO? So those sectors will suffer. And again, it will continue to pump up the price of any stock that can call itself AI related. So again, I hope that all helps. And let's continue these discussions. What do you think of all of this? My opinions in these regards. Let's continue the discussion in the Discord. You can put it in the comments to this video. I'd love to hear your thoughts on my opinions. What else do you think will benefit near term? What will suffer? And we can continue that discussion. So we've also been talking about making money trading in February, in the winter. You can hear about those seasonality trends via the links to those videos. Tomorrow we'll talk about dividend payer stocks. Again, we'll look at that CTA again and our dividend payers. Also, we'll talk about option strategies, additional ways to generate income. So here's my question also related to our discussion on AI. Again, I don't really have the time today to talk in more detail about my experience, my past experience with some of these technologies. I would like to share that with you. Hopefully you would benefit from it. It won't necessarily be strictly stock related, and some more visionary, and I'm trying to also be careful not to, some people hype some of these things and pump the stock prices up, and it's kind of early for the technology. We talked about the adoption cycle, etc. And again, in my humble opinion, it's going to take a lot longer than people expect for us to actually see these AI technologies popularly, generally adopted, and see real benefits, and particularly in a company balance sheet. I think it's going to take, again, a lot longer than people expect. So I think it can be damaging to overly hype some of these, but I'm happy to talk about my perception of the future of some of these technologies and how they might benefit us in kind of a separate talk. So the question for the community is if you'd be interested in separate kind of tech talk live streams, possibly on our other sister channel, our virtual consulting channel, and if so, when would be the best times, days and times for those kind of tech talk live streams. And again, I can talk more about my experience, opinions, and futuristic views of some of these technologies, including but somewhat separate from particular stock impact. So please let me know your thoughts if you'd be interested, when would be the best times for that, and what you think of all of this. Also, if there's any other suggestions you have for how we can improve our weekly trading game plans, any of our other videos, our tools, our community, etc., please let us know in the comments. Again, in our free Discord. Again, you can find an invite to our free Discord in the description box below. Also, you can find links to all of our social media accounts on our homepage, which is beachbumtrading.com, bum without the U. And we'd greatly appreciate it if you'd follow us on all of the various social media sites that you participate in. You can contact us with any questions, comments, recommendations for improvement, etc., via any of those social media sites as well. We'd also greatly appreciate it if you'd like this video, share our content with your other traders and friends, repost our postings on the various social media. We're trying to continue to grow our community for the mutual benefit of all of our BeachBum traders, and we really need and appreciate all of your help. So yeah, carbon. Yeah, actually, again, I won't opine on that here, but again, another topic for a potential tech talk is, some of you may know, I used to be a consultant with the IBM Consulting Group when that first started, and we can talk about, my experience and opinions with IBM, but again, it's a longer discussion than I'd like to have here. So again, I hope you'll like this video. I hope you'll share it. I appreciate all your participation and help in continuing to grow our BeachBum Trading YouTube channel. And I hope you all come back again 10 a.m. tomorrow for part 2 of our weekly trading game plan, where we'll take all of these market analysis strategies, trade ideas, etc. We'll select our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list. We'll also look at some of those stocks people have asked questions on, and we'll look at dividend payers and additional option strategies for generating additional money, while AI FOMO is raging and in any stock market. So thank you again, and hope to see you again tomorrow. Have a great rest of your day.